at this hour, inflation jumps to 6.84% in February as the hike in fuel prices weigh heavy. But core inflation slips below 4%, much to the relief of the government and market players. The Prime Minister's Chief Economic Advisor C. Rangarajan says lower core inflation will give the central bank room to cut interest rates in its policy review next week. The market staged a smart recovery this afternoon after a fall in core inflation keeps the hopes of an interest rate cut alive. Banking stocks bounce back while other rate-sensitive sectors like auto and realty do well. The Nifty closes above the 5,900 mark and the Sensex gains 200 points. The Finance Minister P. Chidambaram says there are no systemic flaws in our banking sector after a sting operation by an online magazine exposes a nationwide money laundering racket involving leading private banks, ICICI Bank, Axis Bank and HDFC Bank. Say they will probe those charges. But petrol may become cheaper, that's good news, by about 1 rupee as oil refiners to say there's a fall in international crude prices. The rupee's gain against the dollar also gives fuel retailers more room to cut prices. Good afternoon, you're watching ET Now. I'm Faye D'Souza. Let's get straight to that top story on inflation. Now, our wholesale price inflation for February rose to 6.84% versus 6.62% in the previous month on the back of those higher fuel costs. However, there was some relief in the non-food manufacturing front. It slowed to 3.8% in February. Now, that's the weakest pace it's moved at since March 2010. This, of course, spurs hopes of a rate cut. Now, this is the benchmark which the RBI uses to gauge demand-driven price pressures. So, which is why there is hope, of course, that there will be a cut in rates next week. Now, fuel prices rose 10% or 10.5%, while manufacturing goods inflation slipped about 4.5% in February. Food inflation also slowed to 11.38% during the month, but it has stayed in double digits for the third straight month. Well, let's hear out C. Rangarajan, the Prime Minister's Chief Economic Advisor, on his take on these inflation numbers.
Certainly, the non-food manufacturing inflation has come below 4%, which is a very welcome sign. Since the core inflation has been identified as the result of demand pressures, and since containing demand pressures is the objective of monetary authorities, the reduction in the non-food manufacturing inflation certainly gives, in my view, a greater space for monetary authorities to act.
And speaking in London, RBI Governor D. Subbarao has once again stressed on the need to remove subsidies from petroleum products, saying that these subsidies are preventing the impact of high global oil prices from showing up in the Indian economy. He also stressed on the need to maintain the path of fiscal consolidation to ensure inflation stays in check.
The government in India subsidizes petroleum product prices, the administered prices. So inflation, instead of going directly through these prices, is going through the fiscal deficit route. And sadly, not sadly, but regrettably or disappointingly, the demand adjustment that must come through higher prices does not come through because prices are administered. So even as global prices go up, even as the rupee price goes up, the demand doesn't adjust in India. Politicians typically have a higher discount rate than most of us. So fiscal consolidation is a problem. But it is very, very important that for sustaining growth with price stability, India firmly, credibly embraces fiscal consolidation.
For more voices, market men were divided on whether the latest inflation numbers will prompt a rate cut by the RBI. Chetan Iyer of Morgan Stanley believes the RBI will hold on to interest rates in its credit policy, while Simran Chakrabarti of Stanchart expects a 25 basis cut.
We have lately been focusing more on CPI than WPI because we think that is one which determines the inflation expectations for the households. it is also determining the allocation of saving for the households into financials and physical savings. All in all, looking at CPI inflation, current account deficit, low deposit growth, we think that it's time to still hold on the rates before we go and make another rate cut.
It's slightly higher than our own expectations, but very critical would be to see that whether how much of the diesel price increase has been factored into this particular calculation. My sense is that the divergence between CPI and WPI can continue because the food price at retail level and wholesale level can remain divergent in the near term. This backdrop creates room for probably another 25 basis point rate cut on March 19th. The only thorn in the flesh is actually the CPI print, which is diverging from this broad trend.
All right, let's take a look at how our markets did today. It was a day of solid gains for the Lal Street. The Nifty on your screen right now conquered the 5900 mark. The Sensex notched up 200 points. Now, rate sensitives like banks, autos and real estate rallied in trade today on hopes of that rate cut. Let me bring in Aisha Faridi, who has all of that trading action for the day. Aisha.
Well, extreme volatility coming in for the markets. There can be inflation data. The markets did tank a fair bit, a good 1% actually, and we dipped below the 5800 mark as well. And then you saw a fair amount of unwinding, short covering, and then it pulled back the market all the way to the 5900 mark on closing tick. But it couldn't have been done had it not been for the participation of the banking pack. So there we were, a good 2% or over 2% gain actually coming in for the Bank Nifty, and it has indeed been the biggest percentage gain for the Bank Nifty ever since November 29th. Good amount of gains coming in and largely all banks. So SBI held out very well, as was the case with ICICI Bank, HDFC Bank, BOB. All these stocks were doing very well. Maruti, Ranbaxy, Tata Power, Asian Paints, Unilever, Reliance Infrastructure, Reliance Industries, BPCL, as well as JP Associates too were the gainers in trade. Can't say the same about the broader markets because it was pretty much split in the middle, and even Stephen Market Press to close the day with, while you did have the mid-cap index which gained about 1%, small caps closed in absolutely flat for the day. Nonetheless, a handful of movers and largely all banks again. Besides that, of course, you had gainers in the likes of Jubilant Foodworks, Prestige Estates, Unitech, TV18 Broadcast, Karnataka Bank, PVR, Anantraj Industries as well held out. Indiabulls Real Estate, Z and HTIL2 made the moves. Volatile, but can't say whether or not if 5900 is here to stay. We'll find out at 8 a.m. tomorrow morning on Trading Calls. For now, it's back to you in the studio.
All right, Aisha, many thanks for bringing us those details. So what's the road ahead for the Lal Street? Is the market likely to move in tandem with the global scenario? Let's hear out a few of those expert voices that were on the channel today.
Things are moving in the right direction, and we are making a bet purely based on flows. And I think that those flows will continue. If we get another year of 22, 23 billion, then I think we'll get there. But we may also see lower. I think this is a great year for volatility, but I think we'll see up before down. People are saying, okay, US market housing has turned, therefore Indian market housing will turn in 3 months. And I think that's what's driving real estate stocks, for example. So it's the expectation that we will follow those markets. You know, we used to be separate. We are now closer together, and I think we are following the same trend.
Perhaps the market went in quite short. So, you know, once the market went down a bit, I think you may have seen some short covering coming through. That is the only explanation that I can think of for it to rally as much as it did, because obviously, you know, it will not, if you are actually covering up the shorts, you will get some upside on that as well.
Let's also take a look at our futures and options market and see how action shaped up today for some cues also of how the market is headed. Navneet joins us from our research desk for more details. Navneet, take us through what happened in the F&O market today.
Well, it was an extremely volatile session. You had the Nifty futures which actually opened 50 points down. We covered the morning losses and actually closed up by about 1%. So you had the Nifty March futures which closed above the 5900 mark, in fact very close to that 5950 mark at 5940. The premium inched upwards to about 32 points to spot Nifty. Remember, intraday the spot Nifty is split below that crucial 5800 mark too, and you had the Nifty March futures which added about 4.5 lakh shares in today's trading session. Well, if you look at the India VIX, that was down by 9%. Remember, till yesterday India VIX was up by 20% because of high volatility in the market, so that went down by 9%, and it augured well for the options data also, because if you look at the Nifty PCR, that fell today to about 1.19 compared to yesterday's closing of about 1.28, and that was on back of unwinding which we saw in lot of put strikes like 5500 which shed about 7 lakh shares, 5600 put strikes shed 30 lakh shares, 5700 shed about 19 lakh shares, whereas in the call side you saw shedding coming in for 5900 and addition was seen for 6000 and 6100 strike today. Talking about the stock futures, well, among the Nifty gainers, needless to say, it was the banking pack which did well. So you had the likes of State Bank of India, ICICI Bank, where fresh long positions were being built up. You also had Rinbaxi and Maruti which did well for themselves. On the short side, you had Bajaj Auto and GAIL which were down, and well, from the mid-cap arena, you had Titan Industries which was down. Remember, this counter has fallen by about 8% in last 5 trading sessions. You also had Macleod which was down by over 2%, short positions being built up for these two counters. Jubilant had a good run up today. The stock was up by about 7%. Huge amount of open interest addition was seen for this counter, so long positions were seen there. In terms of open interest gainers, you had IOB, Jubilant Foodwork, Asian Paints, SBI and Titan. Well, in terms of participation too, the turnover was quite high today. We clocked about 2.43 lakh crore of turnover on NSE by the end of the day.
All right, Navneet, thank you so much for joining us with those details. Let's move on now to the big banking story that broke today. Private lenders ICICI Bank, Axis Bank and HDFC Bank have been hit by allegations of facilitating money laundering and flouting RBI norms. Now, the bank stocks took a beating at early trade this morning in the wake of those allegations before recovering in late afternoon. Anirudh Ghosh joins us for an update. Anirudh, good evening. Thank you for joining us. First, tell us how serious these allegations are, and have you heard from the banks? Have they responded to these allegations?
Well, on the face of it, these allegations are quite serious, but then remember, we have to point out that these allegations have been made by an independent news magazine website, and clearly ET now has had no means to verify these on our own. Of course, the magazine did come up with close to 100 hours of footage which they claim they've actually gone ahead and shot, and actually they presented this in a press conference, and they claim really that these banks have indulged in some amount of facilitation for money laundering. They claim that a number of their employees in HDFC Bank, in ICICI Bank and Axis Bank have been really caught red-handed by these particular reporters from the news organization, as being helping customers really facilitate black money transactions, also helping them subvert various income tax rules, various RBI KYC norms, as well as a number of other rules. So clearly, if these allegations are proved, it could be quite detrimental for these banks in question. But then again, like we mentioned earlier, they are yet to be proved by any particular statutory body. Neither the RBI nor the Finance Ministry or Enforcement Directorate has come out with any particular statement on this. The Finance Minister did, of course, release a statement earlier today talking about how he's spoken to a couple of banks. The banks have, of course, maintained their innocence in this matter and said that they will look into the matter, and actually if there is something that needs to be kind of looked into, they will take stringent action on this. So clearly the onus now lies on the necessary regulatory bodies and the statutory bodies, whether it's an investigating agency or anything else like the Enforcement Directorate, which looks into this. At this point of time, that's all that we can say from our side, because we haven't, of course, verified these facts or the story from our end.
All right, Anirudh, thank you so much for joining us with those details. Anirudh there from our Banking Bureau, bringing us that story. The next obvious step will be, of course, a probe by the Enforcement Directorate. Let's find out what the Enforcement Directorate is saying at this point. Let's go across to Suchetna Ray, who joins us with exclusive details. Suchetna, what are you hearing in Delhi?
Sources in Enforcement Directorate tell us that we have to remember that they cannot take suo motu action on any case, which means that though Enforcement Directorate is acknowledging that these are very serious allegations of money laundering that are being made, but we have to remember that these allegations are being made by an independent website, and based on that, Enforcement Directorate as an agency cannot take any action. They can only take action by initiating an investigation once a competent agency or the government refers the matter to Enforcement Directorate. So they're waiting for either RBI the Central Vigilance Commission, CBI, or even the Finance Ministry to refer the matter for Enforcement Directorate to investigate. Sources there tell us that in the past they have investigated such cases of money laundering. Remember, money laundering is a civil case. Therefore, they have investigated such certain matters, and some banks were found to not paying heed to KYC norms or carrying out proper due diligence. But as of this matter is concerned, they are not yet, a case has been referred to Enforcement Directorate for taking any action. Of course, sources in North Block tell us that the Finance Minister did have conversations with the three banks in question. Two of the CMDs of these banks have categorically mentioned that their internal probes shows no malpractice or irregularities as of this time.
Alright, Sucheta, thank you for joining us with those details. Well, on for some good news. Oil marketing companies are gearing up for another round of fuel price revisions. Petrol prices are likely to be lowered by 1 rupee a litre, while diesel prices may get more expensive by around 50 paise per litre. Nithya Balakrishnan has more details.
Good news awaits consumers at the petrol station. Fuel retailers like IOC, HPCL and BPCL are all set to cut petrol prices by a rupee per litre. This due to a marginal reduction in global crude prices that have come down to about $120 per barrel from $131 a barrel at the last revision. Even the rupee has marginally appreciated against the dollar to 54 rupees 11 paise. A welcome move for consumers who have braced two consecutive hikes in petrol in recent weeks, first in February and second in March. In line with the government's attempt at staggered diesel deregulation, retailers are likely to hike diesel prices by close to 50 paise a litre beginning this weekend. Despite three consecutive diesel price hikes, oil marketing companies continue to lose over 11 rupees per litre on sale of this subsidized fuel that accounts for almost 60% of the total under recoveries. But experts insist baby steps towards diesel deregulation will make it more acceptable and will help improve the financial health of fuel retailers. The good news about deregulation is that when prices come down globally, so will your fuel bills. Sakshi Batra and Nithya Balakrishnan, ET Now, New Delhi.
Staying with the oil sector, big reprieve for the exploration giants Cairn India and ONGC. Government sources tell ET Now that conditional clearance has been indicated by the Defence Ministry for one block each that earlier fell in the non-go zone. Now, Nithya Balakrishnan joins us with exclusive details. Nithya, how soon is it going to be before this official clearance is expected for these blocks?
That's right, after Reliance Industries, it is now the turn of Cairn India and ONGC for some sort of reprieve really from the Defence Ministry. Now, sources tell us that in a crucial meeting yesterday between the Oil and Defence Ministry officials, a decision was taken on one block of ONGC and one block of Cairn India that earlier fell under no-go zones. As proclaimed by the Defence Ministry, we're given to understand that they have softened their stand a little bit, indicating it will be a partial go-ahead for blocks OSN 2000/4 to ONGC and OSN 2000/3 to Cairn India. This means that over 50% of the area will be opened up for exploration by the companies, a significant breather because earlier Defence Ministry had indicated that there will be no exploration activity at all in these two blocks. Now we're given to understand that out of the 7 blocks in no-go zones, Reliance Industries gets a complete go-through, one of ONGC, one of Cairn get a partial go-ahead. Now 2 blocks of ONGC and 1 of BG will actually remain in no-go zones. Defence Ministry will reiterate there will be no exploration in these areas, but very importantly, the Cabinet Committee on Investment is likely to meet again before the 20th of March to give the final go-ahead and clearance officially to over 40-odd oil and gas blocks, and definite boost indeed to Reliance Industries, Cairn as well as ONGC in that.
Now, in what could be a huge relief for India's largest telecom company, Bharti Airtel, the Telecom Department is likely to decide that for 2 of its crucial circles, Delhi and Mumbai, where the 900 MHz license comes up for renewal soon, business continuity will not be compromised. My colleague Gauri joins us now with more details. Gauri, what kind of call is expected on the license renewal? Can you take us through how this impacts Bharti Airtel?
for Bharti Airtel, this is actually a very, very crucial decision. Two of its major circles, Delhi and Mumbai, come up for renewal in November 2014, and there is a strong view within the Department of Telecom that business continuity cannot be compromised, and in fact the interest of consumers needs to be taken into account when a final decision on license extension is taken. Though of course license extension application, a final decision on that is likely by next week. A view within the DOT is that continuity of services, continuity of operations should not be compromised, and for that probably an interim relief could be given to the company. And this impacts not just Bharti Airtel but also of course extends to Vodafone as well, because it has three circles, there is Delhi, Mumbai and Calcutta, that come up for renewal next year. And in that interim relief of course could be a window in which the companies may of course have time to figure out an alternative strategy. It could be on this lines similar to what the Supreme Court gave last year to companies that had their licenses cancelled, when a 4-month window was actually given as interim relief. And that of course, something on those lines would be a huge boost for both Bharti Airtel and then Vodafone.
Alright Gauri, thank you for joining us for those details. On to now, an ET Now exclusive. The news tightens in Kingfisher Airlines. A month after bankers decided to recall loans to KFA, sources now tell ET Now the consortium leader, State Bank of India, will send the formal notification to Kingfisher Airlines post its own board meet, which is currently underway. The bank plans to send the formal letter as early as this week. ET Now learns that other lenders could follow suit and send individual notices to Kingfisher Airlines. Alright, so that's a wrap on this show. Thanks for watching. Stay with ET Now for more news and updates.